Investors and traders, welcome to the channel Market Chart Pattern. Today is 28th of March 2025. Hope everyone is having a fantastic day. We will take a look at the key markets for this video segment, and this is going to be the video number one of two video sets. In this, I will only cover the key markets such as the dollar index, bonds, gold. And then there's going to be a second video which is going to be on stock indices only, and that I will publish on Sunday. As always, this video is for educational purposes only. It is not a financial advice. We are taking a look at the weekly chart of the dollar index. We can see that the dollar actually tried to rally this week. It's finding quite a lot of resistance from this 89-week moving average. Clearly, the momentum is actually weak. So the dollar is getting weaker against a basket of currencies. We have already seen today, for example, just to mention, stock indices came under pressure today. So it does appear that the money is moving into other asset classes. So maybe even dollars are moving out of the United States. So some sort of repatriation happening. I don't know exactly what the reasons could be. Technically, this is the point we were watching for, where we were looking for a great deal of resistance to come in, and in this zone, this is what we have seen. The market has pulled back quite a bit. And then if we take a look at this on the daily chart, here we go. This is the pattern that I had drawn back then, beginning of January, beginning of the year. Market went right to it, 1.618 expansion, and we have seen a pretty big move to the downside. And here what we see is that the market tried to rally. This rally is equal to the rally that we have seen before, so the market symmetry concept, and then two consecutive negative closes, and of course it broke this trend line as well today. So the dollar does look pretty weak. Now let's take a look at the interest rate instruments. So this is the shorter end of the curve, 2-year Treasury note, and here exactly this is what we spoke about, that the yields are actually likely to move lower, and I think this move has quite a bit to go. The move started right here, and when it broke below, there was a 38.2% retracement. It broke below that, and then it rallied a little bit exactly to what the previous rally was, so the market symmetry. And then it's just today had a big move to the downside, so it was down minus 2.1%. Now it could also be because of flight to quality. So as the money moved out of the equities, it started to go into these fixed income instruments. That is certainly a possibility, but what we are looking at is a possibility. I'm just gonna remove this channel formation now. Here we go. I think what we could be seeing is actually a move like this. ABCD 1-to-1 price projection right towards this bottom, where we could have structural support. And on the bigger picture, it is a little bit early, but we have a bigger ABCD completing around 2.95%, so almost 3%. Looks like this is what the 2-year wants to target, and it's something really interesting because we had the inflation figure come out today, which was a little bit higher than expected. That was the core inflation, but we saw actually the yields move lower. So pretty interesting, and the dollar was actually under pressure as well. Now, if we take a look at this on the 10-year Treasury note, here we go. This is the market symmetry concept. So the rally did not go any higher than this, right at the 38.2% retracement, and now I think it's targeting this 4.064% roughly, in that ballpark figure. Momentum is bearish, so the yields are actually likely to move lower. And then if we take a look at this on the flip side, meaning on the futures chart, there we go. I've drawn this triangle pattern, so the market actually broke out of it, and normally when it breaks out of these dynamite triangle patterns, it is usually a pretty explosive move, and I think we are seeing the beginning of this move after a bit of consolidation. Went right to the 38.2% retracement of this swing low right from the beginning, 14th of January, the highs we saw 4th of March. And it does look like what it wants to do is, if it continues the move like this, here we go, it's already above the 38.2% retracement. I think it's going to go and target this zone right here around 112, 113 level on the 10-year treasury note. And if we take a look at this on the T-bond futures, so this is the long bond futures, it completed this pattern, which is the market symmetry. Again, the correction was exactly what we had seen in this segment before, this blue ABCD. Although it went below this trend line, it broke below that, but it's a pretty strong move, is indicating that the price is likely to move higher or yields move lower. So if it is able to get above this line, it's going to be a throwover, which is a pretty important signal. So with that in mind, what it could do is, if we just take the expansion levels, if it continues to rally, we could see 120, 22, and even 122, 122 as well. So 120, 22, and 122, that remains on the cards. So I think the yields on the longer end are also falling throughout the yield curve. We can see it has actually moved. The yields have moved lower. So that's a really interesting development. Now, let's take a look at the Bitcoin. What's happening with the Bitcoin? Now, March is a really interesting and key month for the Bitcoin per the Lucas timing model that we follow. So I think over the weekend I'll do a video. But what we are seeing is this market coming under a great deal of pressure. Look, these are just lower highs there and lower lows. So I think there is a chance that this market is actually heading towards this level, which is the 61.8% retracement, 72,000, and even roughly 62,000, which will be the 78.6% retracement. And I think it could also be a ABCD like this. There you go. So I think we are in this ABCD structure like this, and 62,000, 63 to 62,000, quite likely this is where this market might actually head lower to. And then let's take a look at Euro USD real quick. As the dollar weakened, we are seeing a rally in the Euro USD. So since 14th of 13th of January, this one actually retraced right to the 38.2% retracement. This retracement was a little bit bigger than the one that we have seen previously in this move. But it looks like it wants to actually travel higher now. So as dollar weakens, the euro is strengthening. Now let's take a look at the gold market, because it's really interesting what happened with gold. So you see this big jump, it's because of the rollover. So I think I'll switch over to the spot gold as well. So we have moved to the June contract now, and we saw this big gap because of it. But you can see the gold broke out of this consolidation. We had this pattern completed for a few days, 1, 2, 3, 4, 5 days. The market just went nowhere, just retraced a little bit, like minus 1.67, minus 1.7%, and now it just broke out of it. So gold is looking strong. Now let's take a look at this through the eyes of the spot gold as well. There we go. So the gold is extremely strong, and it just doesn't want to retrace. The retracements are pretty shallow. So clearly this is evident. The metal wants to go move higher, and here we go, a really strong trend. And if we just go back to my chart on the gold futures, here we go. So I had actually a monthly chart. I want to go there. There we go. So we are actually moving right into this box that I had drawn several months ago. It's getting into these upper targets now. It will be really interesting to see what the market is likely to do from here. Now, maybe even if we get a correction, I think we do not get a topping in the cycle till 2027, in fact, because that is where I have my timing cycle coming in. So I think gold has got some further room to travel, um, and maybe even as high as 3650, a little bit higher. Very, very, very strong metal. Gold is very, very strong. Let's also take a look at how the silver is doing. There you go. So silver is very close to completing its ABCD. At one time, it looked like it might not do that, but it's pretty interesting that strength is also coming um, into the silver, but it's not as strong as the gold, of course. And then if we take a look at this on the daily chart, here we go. It does look like it wants to go and travel to because it just broke out of this triangle formation. 3668, maybe 3872 as well. So really, really interesting. What is also happening in the silver market. So with that, I think I've covered the majority of the markets that we like to follow, and there's going to be another video for the stock indices that will be published on Sunday. So thank you very much for watching the video. If you like our technical analysis, please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. And then if you happen to like, you learn something from the video, then please give it a thumbs up as well. So thank you very much. Good luck, good trading, and speak to you guys soon.